Good day, students. I will be doing the 2010 question paper, and it's for November 2010. And I'm starting with question 1. I will only do question 1, which is the close cooperation of the question paper, and it was out of 70 marks. It says that Newton and Yorker have been operating a close cooperation called New York CC for the past few years and have 70% and 30% members interest respectively. So now this is their members interest, 70 and 30%. Take note of that, is very important. We have the members contribution, retained earnings, and please be informed that these are on the 1st of January, beginning of the accounting period 2010, and also 1st of January 2010, so that we are on the same page. We have opening balance for retained earnings already given to us. Just to have an overview: mortgage loan account, payables, SARS, provisional tax. We have a tax that was paid during the year as 90,000 rands. So now we have to compare this with the tax expense to determine either do we have a tax that is due or receivable to or from SARS. Then after we have property cost, vehicles, accumulated depreciation account, receivables, allowance for credit loss. We are given the allowance for credit losses as 11,000 rands. Remember, we have to normally calculate allowance for the current year or the new allowance. Then we compare that with this allowance to determine if is there any increase or decrease in our allowance for credit losses. Then we have a prepaid expense which was prepaid on by the 1st of January 2010 current year. That means this expense in terms of insurance was paid last year, and it means we paid 3,000 last year for the next month, which is the month of January 2010. So now it was prepaid last year, then we have to make a reversal for this prepaid expense of insurance. And we know that a prepaid expense is an asset. So now if we make a reversal for this 3,000, it means it must be recorded on the credit side. Then this 3,000 will have to be credited as prepaid expense, and we acknowledge it as expense in the current year. So now in the reversal, it means we have to subtract the 3,000 rands of the insurance being recorded on the credit side. Then after we have inventory, we have members free loan 100,000 rands and 30,000 rands. So now that indicates that there are loans of 100,000 and 30,000 rands. And if you see these loans are recorded on the debit side of the trial balance, it indicates that these are the loans that were given to the members by the close cooperation, and they don't have interest, members interest free loan. Then now that means these are the assets in the close cooperation perspective. Then we have bank sales, cost of sales, in the interest expense on the loan. There we have interest expense on the loan as 82,500. Remember, there was a loan that was borrowed by the business amounting to 600,000 rands, and the interest, the loan bears interest at 15% per annum. So now it means if we say 600,000 rands times by 15%, that will give us the interest that is supposed to be paid by the end of the year. And if we say times by 15% here, we get an amount of 90,000 rands. So now we're supposed to pay interest of 90,000 rands, but we only paid 82,000 rands 500. That means the difference between the two will be an accrued expense of 7,500, which is accrued interest expense. So that tells us that our interest that will be recorded in the income statement is the one of 90,000 rands, being 82,500 plus 7.5, that will give us an amount of 90,000 rands, or else just 600,000 rands turned by 15% will give us the amount of the interest on the loan that was incurred during the year. Then after we have credit losses, which is our bad debts, 10,000 rands. We have insurance. This is the insurance expense that was paid during the year, so now it's already paid. And if you see, before there was a prepaid insurance of 3,000 rands, and now we have insurance that is paid amounting to 36,000 rands. So now remember, this was a prepaid expense and this is expense that was paid in the current year. So now we'll take that and also take into cognizance of the adjustment. Then let us continue. We have wages and salaries to the members. We also have operating administration cost by 44,000 rands. I will explain other entries as we go to the adjustments. Now let us go to the requirements before we take into account all the adjustments. In the requirements, under number 1, we are required to prepare the journal entry to adjust the interest expense account on the 31st of December 2010, as well as the closing transfer to the profit and loss. So now we have to make the adjustment for the accrued expense in terms of interest for 7,500, the one we have just calculated, and also close it off to profit and loss. So I will do that. It's very important. Number 2, we are required to prepare the following ledger accounts: asset disposal and accumulated depreciation on vehicles. I will not do this requirement because you have done asset disposal last term and you will not be tested in the 2016 exam. Number 3, we are required to prepare the insurance expense account. That is important. Insurance expense account, consider only note number F and the relevant accounts on the trial balance date may be omitted. So that is also important. I'll do that. Consider number 4. Consider all the relevant information and prepare the statement of comprehensive income. That is the key statement. Number 5, consider all the relevant information and prepare the statement of changes in equity for New York Close Corporation. That is very important. Number 6, consider all the relevant information and prepare only the current liabilities section. I am not going to do that because you will not do balance sheet. Prepare the following note to the financial statements of New York CC for the year ended 31st of December 2010. So now we would definitely need to do the members interest free. Number 9, we are required to calculate the interest consider note number 1 and all the relevant information to do the following: calculate the value of your car's 30% interest in the corporation. That one is not much important. Then after, we have number 9 that says assume that New York has incorporated with an authorized share capital. That will be at your second year level. So now I'll only do the adjustments that I have, the requirements that I have circled. That means I will stop to requirement number 7. Those are very important for your exams. So now in preparation of that, I already have the statement of changes in equity for the close corporation, prepared it before time. And again, I did a rough draft of the income statement already for you. So we already have the draft of how the income statement will look like. Statement of comprehensive income. Don't be shocked. Statement of comprehensive income, that is just an abbreviation for the year ended 31st December 2010. So now I normally take into account all the expenses that are already given in the trial balance when it comes to expenses in the income statement before I do anything. There I started with the credit loss 10,000 and insurance 36,000. And then we do have our credit loss from the trial balance. Our credit loss at 10,000 rands, and the insurance that we take is the insurance expense that was paid 36,000 rands, not the reversal of the insurance, or not the prepaid expense of 3,000. I'm not taking that. I will consider that immediately now. Then after we also have wages of 200,000 rands and salaries to members 240,000 rands. There we do have 200,000 rands wages and salary to members 240,000 rands respectively, as you can see them. Operating expenses amounted to 44,000 rands. There is the 44,000 rands. Please take into account the fact that depreciation, we know that you know how to calculate that, so hence I just gave you. In this exercise you are required to do some calculation considering the disposal and the purchase of the asset, but we don't do the disposal in this term. And also I gave you the amount for the asset disposal already calculated, because you will not be tested on the asset disposal since you were tested last term. So now I've given you the amounts for the asset disposal and the depreciation, because in the exam you will not be required to calculate such. Under the finance cost, I've just wrote the amount of the finance cost 82,500, and this is the amount of the finance cost 82,500. I just wrote that as it is. So now from here we can just start with the income statement and complete the rest. Then after we go to the adjustments. Always I say to students, when you are required to do the income statement, make sure that you take the marks that are giveaway marks. The amount for sales there is 2,370,000 rands. You just take that as it is, 2,370,000 rands, and you record that in your income statement. 2,370,000 rands. Then after we record the amount for the cost of sales, and fortunately in this case we already have the amount for cost of sales, and the amount of cost of sales there is sitting as 1,380,000 rands. 1,380,000 rands. 1,380,000 rands. Then after we underline, we get to the gross profit, and gross profit will be 990,000 rands. Let us just confirm that 2,370,000 rands minus 1,380,000 rands, that gave us 990,000 rands. Under other incomes, I mentioned that we have a profit on the disposal of the asset, and that profit was accurately calculated as 20,000 rands. Don't worry about the calculation of the asset disposal, because you were tested on that last term and it won't be part and parcel of your test in this time. Now from this point, after you have captured sales, captured cost of sales, we can go to the adjustments now and read all the adjustments, and we record them as we deal with them one by one. The first adjustment on the first note to take into consideration is number A, that says Newton and Yoka contributed toward the members' contribution according to their members' interest. There were no contributions during the year. So now they are trying to tell us that during the year there was no members' contribution. However, the members' contribution that you see in the trial balance, it was contributed using or based on their members' interest. So it means for Newton it was 70%, and for Yoka that was 30% contribution. So which means that if we say 600,000 rands of the members' contribution times by 70%, that will give us an amount of 420,000 rands, which is a contribution by member Newton. The second one will be 600,000 rands times by 30%, that will give us 180,000 rands. That means the 30% that was contributed by Yoka is an amount of 180,000 rands. That is already included in that 600,000 rands. So now we can just continue with that. Remember, that will be recorded in the statement of changes in equity, and today I just prefer only to start with the income statement and complete it first. Number B says that property was, let me just note this, This will be statement of changes in equity. Number B says property was revalued on the 31st of December 2010 to a fair value of 1,700,000 rands. This revaluation has not yet been recorded. That will also affect the statement of changes in equity. It does not affect income statement at your first year level. However, you will do that at second year level where you consider revaluation in your income statement. Number C says provide for the interest expense payable on the mortgage loan for December 2010. On the 1st of January 2010, 100,000 rands had been repaid on the mortgage loan. The next installment of 100,000 rands is payable on the 1st of January 2011. So now, by the beginning of the year, on the first day of the year, 100,000 rands was paid, and this was correctly recorded. So now the amount that we see in the trial balance as a loan of 600,000 rands is after the repayment of 100,000 rands was taken into account. So now it means our loan must be, our interest on the loan must be calculated on the full 600,000 rands. So now we have already done that when we did our workings analyzing the trial balance. Let me just do that again. The interest on this loan will be calculated by saying interest is from 600,000 rands of the loan, and we times this by 15%, and it gave us 90,000 rands. 90,000 rands is the interest per annum, but interest of 82,000 rands 500 was already paid. This was paid already, but we're supposed to have paid 90,000 rands, but we only paid 82,000 rands 500. That indicates that there is a portion which is accrued by the end of the year. 90,000 rands minus 82,500. Then, as we have highlighted, that it is 7,500. That is accrued interest expense. Remember, accrued expense is a liability. So now that means a liability of 7,500 arised by the end of the year, accrued expense. So now when we do general interest, I think that was the first requirement. When we do general interest regarding the loan, we'll have to say debit interest expense. That will be the interest expense by 7,500. Then we credit accrued expense, and our accrued expense will be 7,500. Then we cross that is the recognition of the accrued expense at the end of the year of 7,500. And if you see here, interest expense is debited by 7,500. So the minute you debit interest expense, it means it is increasing by 7,500. Then after we recognize, or we transfer, or we closed off this expense to profit and loss. So when we close it off, we recognizing the amount of the expense that was supposed to be paid by the full year. Then after we credit interest expense, and this 90,000 rands is the 90,000 rands that come from 82,500 plus 7,500, because 7.5 was supposed to be paid, and we know that the total of the interest expense for the full year must be 90,000 rands. So we just add 7.5 to 82,500. That will give us 90,000 rands. So now this was requirement number 1, where we were required to take into account the outstanding interest. Let me check if was it really number 1. So now let us check in our requirements. Okay, that was requirement number C. That is number C. They are using alphabets. That is requirement number C. So now we have done requirement number C. Let us take the same transactions and we record them in the income statement. So now under our finance cost, because we know that interest expense or interest on the loan is a finance cost, then 7,500 will have to be added to that 82,500 so that we get to 90,000 rands of the interest that was supposed to be paid for the full year. Remember the principle of accrual basis. It says that we recognize expenses that were supposed to be paid in the trial balance. That is on page 53 of your textbook. It tells you how to deal with the accruals. Therefore, now let us go ahead with other adjustments. So now we have accounted already for the interest expense in the trial balance, and we have accounted for the accrual. Remember, there was no prepaid expense in the trial balance, so now we have accounted for that only under adjustment number C. Number D says that the vehicle's balance on the trial balance represent two vehicles, vehicle A and B. Ignore the vehicle section because you will be required to calculate the depreciation and the asset disposal, of which you will not be tested on that. So I will skip that one as I mentioned before. Then after we go to number E, number E says that included in the trade receivables is a debtor S. Shady who owes the corporation 8,000. He has been declared insolvent and received a check for 75 cents in the rand from his investment estate, and the remaining 25 cents in the rand is irrecoverable. This has not yet been recorded. So now we have to recognize this as a bad debt, and another section will have to be recognized as bank because a portion was received and another portion was not received. So now let us calculate the bad debt section. A bad debt is from the amount the debtor was owing. The debtor owed the business 8,000 and the check was received and the check was 75%. Remember, 75 cents is the same as 75%. And 25% or 25 cents is irrecoverable. So now that means out of the 8,000 we must acknowledge that 25 out of 8,000 we must acknowledge that 25% is a bad debt. So how do we do that? We just say 8,000 rands times by 25. That gave us an amount of 2,000 rands. That means 2,000 will never to be received again. Therefore now 2,000 will be a bad debt. Remember, another part is the fact that out of the 8,000, 75%, of which 75% is 6,000. 6,000 was received, but 2,000 will never to be received. That means the full amount of 8,000, which is 2,000 plus 6,000, is no longer a debtor in the business. Therefore, now it means the full 8,000 must be removed from the debtors of the business as from now after this transaction. Let me first recognize 2,000 as a bad debt in the income statement. Then under my credit losses, I say plus 2,000 rands. I add the 2,000 rands. Then after I continue with the next entry or the next part of that transaction, we are told that the allowance for credit losses must be minimized at 10% of the trade receivables. So now it means we must calculate the new allowance for credit losses by the end of the current year. And they say of the trade receivables. So we have to go to our trial balance and check the amount of our trade and other receivables. Our trade receivables is 198,000 rands. So now we have to say we are calculating the new allowance. the new allowance. When we calculate the new allowance, we have to say our debtors, our total trade and other receivables, 198,000 rands. The one that you see here, the 198,000 minus 8,000 rands. Because I told you that out of this 8,000, 2,000 was received. 6,000, 2,000 will never to be received. 6,000 was received. So now the full 8,000 is no longer a debtor in the business. That means after we set 198 minus 8,000, that will give us 190,000 rands. Then we multiply that by the 10% that was given from the adjustment. That will give us 19,000 rands. Remember, 10% is the amount by which we were instructed to minimize our allowance or to maintain our allowance. We were instructed that the allowance for credit losses must be maintained at 10%. So now that's where the 10% comes from. Then after we have done that, we realize that the allowance for credit loss by the end of the year is supposed to be 19,000 rands. However, in the trial balance, we already have the allowance for credit loss that was coming from the previous accounting period, and that allowance was 11,000 rands. So now we see that there is an allowance for credit losses of 11,000 rands. However, the correct allowance is supposed to be 19,000 rands. It means the allowance that you see in the trial balance as 11,000 is underestimated. Therefore, now we must increase our allowance from 11,000 rands to 19,000 rands. So now if we're doing that, it means we have to increase our allowance by 8,000 rands. Where we say 19 minus 11,000, we get to see that 8,000 is the amount by which our allowance for credit losses must increase by. So now just like to do a general entry for you so that you know how to account for this from the general journal entry perspective. So for this amount, the increase in the allowance for credit loss, when we do a general entry for that, we debit bad debts. We debit bad debts by an amount of 8,000 rands, and we credit allowance for credit loss. Allowance for credit loss, and that will be 8,000 rands. So now this is what you do when you are doing a general entry. Just for space, allowance for credit loss. So that will be debit bad debts and credit allowance for credit loss. And if you see that our allowance for credit loss are credited, and in the trial balance they are also credited, it means you are increasing the amount on the credit side by 8,000 so that it becomes 19,000 rands, which is the new allowance. At the same time, we are estimating, remember, that 8,000 value of our debtors will not pay us. Therefore, because our bad debt are debited, it indicates that we have to add that to our credit loss as 8,000 rands, and that will be the last entry regarding the bad debts. Therefore, now let us continue with the adjustment. Remember, you will not be doing balance sheet in your exam, so hence I don't consider the balance sheet section of this general entries. Then we go to number F. Number F tells us that the insurance premium is 3,000 per month and has been paid until 31st of January 2011. So now it means this definitely is a prepaid expense. Whenever there is an adjustment in the adjusting or under the notes or under the additional information, please make sure that you always first check in the trial balance if there may be any prepaid expense or any accrued expense regarding the adjustment or the expense that you are dealing with. So now in this case, we know that insurance per month is 3,000 rands. So if it is 3,000 rands, it means it is supposed to be 3,000 rands times by 12, so that we get to 36,000 rands of the insurance for the full year. That is the amount that is supposed to be recorded as insurance for the full year. Now let us check in the trial balance. How much, or was there any accrual beginning of the year, or was there any prepaid expense beginning of the year? And as I can see there was a prepaid expense of 3,000, and we also have insurance expense that was paid during the year. So now if we had a prepaid expense of 3,000, it means last year we paid 3,000 and 3,000 was paid for the current year. It means if that is the case, we're supposed to say 3,000 times by 11 to get to 33,000 rands, because another 3,000 was already paid last year, which means the expense that was supposed to be paid by the end of the year in total in terms of insurance expense was supposed to be 33,000 rands. But let us check if was there any payment of insurance. Yes, there is a payment of insurance. The payment of this insurance is 36,000 rands instead of 33,000 rands. So now we can see from the payment in comparison with the 11 payments that were supposed to be paid because of the prepayment of last year, that 36,000 rands minus 33,000 rands will give us 3,000 rands that was prepaid by the end of the year. So now at the end of the current year, there was another prepaid insurance by 3,000 rands. So I hope that does make sense, guys. Then we continue recording now this in the ledger account for insurance. And I like to do ledger accounts whenever there is an accrual. So now in this case, we have insurance expense, and we have to first record the total that we see in the trial balance, the one of 36,000 rands. Then after, we have to do the reversal. The reversal, remember, a prepaid expense, if you see this prepaid expense, is on the debit side of the trial balance, indicating that it is an asset. So now we have to cancel that asset of prepaid insurance, and we acknowledge expense in the current year. We remove the asset, because the minute you pay the expense, it does not become prepaid anymore. Because when the payment, the minute the current year comes, then the 3,000 is no longer prepaid because it was paid for the current year. So now by the end of the current year, the 3,000 is no longer prepaid. So that is why we have to make a reversal for this entry. So now when we reverse that, we have to cancel the asset, and we have to increase the insurance expense in the current year. So now 3,000 will be recorded on the debit side. Then we record 3,000 here. This will be prepaid. This will be prepaid. Then after, now we say on the credit side, we write the amount of profit and loss. Profit and loss will be 36,000 rands. We already know that. So let us just go again to our adjustment. Our adjustment told us that which adjustment was that? It was adjustment number F, that 3,000 per month has been paid and for January, or until January. So this was already clear for us that 3,000 is prepaid. Then when we did the analysis in the trial balance, it was also the same thing. Then after, now we can record prepaid by the end of the year, prepaid insurance expense by 3,000 rands. Then that means we can close off this ledger account. Then this will be 39,000 rands and 39,000 rands. Remember, if you wanted to determine the amount that was prepaid, you could have, or the profit and loss of 36,000 rands, you could have just said 36 plus 3, 39, minus 3,000, which we were told that's prepaid. That will give you 36,000 as the insurance for the full current year. Or you can just say 3,000 times by 12, you get to the same amount. So now the profit and loss will be an amount of 36,000 rands, which is 36 plus 3,000 rands, which is the current year's prepaid minus the 3,000 of the current year. This 3,000 is the reversal minus the current year prepaid of 3,000. So now just 36 plus the reversal minus prepaid at the end of the year. That gave you 36,000 rands. At the same time, if you want, you can just say use a different pen. You can just say 3,000 times by 12. No problem, you get to the same 36,000 rands. That will still be 100% accurate. So now let us continue with again our adjustments. So we have the next adjustment, which is supposed to be G. Adjustment number G says Newton and Yoka have agreed that a member's distribution of 100,000 must be made, which must be credited against their interest-free loan accounts. So now that means we have to take the 100,000, we split according to the members' interest, and we credit that against their loan accounts. And if you remember, in the trial balance, we had loans for these members. So now when we do that calculation, we'll have to show it. Let me just do it here. We'll just have to say 100,000 rands times by, that will be 70%, and this will be 30%. Therefore, Newton will get 70,000 rands out of this distribution, and this member will get 30,000 rands out of this distribution. So now this is a distribution that is credited against their loan accounts. So now in the loan account for member Newton, will allocate 70,000 and Yoka will allocate 30,000 rands. Then from there we can leave that. I will do that in the statement of changes in equity. Let me note it. Statement of changes in equity. Then number I says due to the ill health. The ill health now is not much important. We can ignore the ill health so far. Therefore now I'm done with these adjustments. Where is the tax? Okay, sorry, number H. We have done number G. We have done number, okay, we are doing number H now. Sorry, this is not the statement of changes in equity. This is the one, statement of changes in equity. So number H says provide for the income tax expense, which is estimated to be 110,000 for the end of the year 31st December 2010. So now we have to make provision for the tax expense. Remember, I said that when it comes to this, you also have to know how to calculate tax due or receivable to SARS. And if you see here, we have a SARS provisional tax expense or SARS provisional tax payment. So we paid 90,000 rands of tax during the year. Provisional tax is just a provision that is made during the year. But we're supposed to have paid an amount of 110,000 rands. So now it means we can calculate tax that is due or receivable to SARS. So now when we do that, we have to say taxation expense. Taxation expense is 110,000 rands. 110,000 minus SARS provisional tax payment. Provisional payment of 90,000 rands, because we want to calculate the tax that is due or receivable. So now after you have done that, you'll realize that the difference is 20,000 rands. 110 minus 90, That gave us 20,000 rands. So now we paid 90,000 rands instead of 110,000 rands. So that means the difference is tax due to SARS. Difference will be tax due to SARS of 20,000 rands. If the payment was above the tax expense, that will be tax receivable from SARS. So now that is important only for the balance sheet, but also it's very good to know how to calculate that. So we can just go and record tax expense in the income statement. I think I've made a provision for that. Yes, tax expense is 110,000 rands. Then after we have, okay, that is not where tax expense goes. Taxation expense 110,000 rands. So now if that is the last adjustment, we can just calculate the total for all the expenses that we had. The salaries or the wages of 200,000 rands are just supposed to be recorded as they are because there was no adjustment. Salaries to members 240,000 rands. There is nothing to adjust on that. Administration expenses is 44,000 rands. There was no adjustment. When it comes to bad debt, we have to say 10,000 plus 2,000 plus 8,000. That should give us 20,000 rands. 20,000 rands. Then another expense that must be taken into account. Remember depreciation, I said don't worry about that. It will just be given for you to paste or copy and paste from the trial balance. We have, okay, there's no other expense to take into account. So now we can just calculate the total of all our expenses. Total of all our expenses up to the depreciation of 110,000 rands. And if we calculate all the expenses up to 110,000 rands, it will be 20,000 plus 36,000 rands plus 200,000 rands plus 240,000 rands plus 44,000 rands plus 110,000 rands. That will give you 650,000 rands. Therefore, now we have to say gross profit plus profit on the disposal of an asset minus expenses. Then we get to the profit before finance cost, and the profit before finance cost and tax will be 360,000 rands. 360,000 rands. Let me just confirm that. 990,000 plus 20,000 minus 650,000. That give us accurately 360,000 rands. Then after we subtract 90,000 rands minus 90,000 rands, that gave us 270,000 rands. That is 270,000 rands. Then we subtract our tax expense. That will give us profit for the period minus 110,000 rands. That will give us profit for the period as 160,000 rands. So that will be the profit for the period, which goes straight to the statement of changes in equity. In the statement of changes in equity, we record the profit for the period straight as it is under retained in earnings 160,000 rands and under total 160,000 rands, which come from the profit statement. So now I can start with the statement recording the opening balances. We have calculated the members' contribution. I think it was 420,000 rands and 180,000 rands. I think it was like that when I did my calculations. However, now, okay, there we go. We had 420,000 rands. There is 420,000 rands. 420,000 rands and 180,000 rands. Those are the amounts. As you can see, I hover my mouse there. 420 and 120 after I have splitted it to the two members. 420 and 180,000 rands, which gave us the same 600,000 rands. 420,000 rands and 180,000 rands. Let us check if did we have any revaluation reserve during the year, or revaluation opening balance. I think there was a revaluation opening balance in the trial balance. Revaluation, I said that must be an opening balance 200,000 rands, and retained earnings is 501,000 rands. We'll just record both of them, 200,000 rands and 501,000 rands. Opening balance, revaluation, and retained earnings. Revaluation 200,000 rands. We don't have general reserve. Retained earnings is 501,000 rands. Then under total we have 1,301,000 rands. Then there was no additional contribution, or there was no additional members contribution. Then, and also there was no transfer to the general reserve. There was no adjustment that said that. Revaluation reserve, there was a land revalued during the year. That was adjustment number 2. We were told that the property was revalued on the 31st of December 2010 to a fair value of 1,700,000 rands. In the trial balance, the value of land and building of the property was 1,500,000 rands. So now if you say 1,500,000 rands minus 1,700,000 rands, you will see that there is increase in the value of the land by 200,000 rands. So now our revaluation surplus for the current financial year will be 200,000 rands, which is the same as the opening balance. Revaluation is 200,000 rands during or by the end of the year. Then that goes straight under total of the total column. There was also a distribution of profit to members, and the distribution of that profit, I think it was a total of 100,000 rands. I'll just confirm that it was a total of 100,000 rands. We splitted that into 70,000 and 30,000 rands. There was the revaluation, the distribution of profit. Yes, 70,000 and 30,000, which is 30% and 70%. That was adjustment number G. So now we have taken that into account. It's 100,000 rands. Check if is there any other entry now to take into account. That go to the statement of change in equity. No. We have done number A, we have done number B, we have done number G. Then what else to do with regard to the statement? Nothing else. So now we can write the total for the statement, which is 420,000 rands and 180,000 rands. That will be 400,000 rands. Nothing was generally reserved. We will have 561,000 rands, and the totals will be 1,561,000 rands. So now with that we are completely done. Then we do the last section, and the last section is to deal with the loans. The last section we deal with the loans, and there was a transaction that told us that the distribution must be credited against the loan account of the members. This was adjustment number G, and we did the calculations here. These are the calculation where the distribution must be credited against their loan accounts. So now let us do that quickly. I already have the members' interest-free loans. Then I have to take into account their opening balances in the trial balance. In the trial balance, we had members' interest-free loan 100,000 rands and 30,000 rands. So I just write those ones as opening balance. Therefore, now I can have that as an opening balance. It will be open brackets 100,000 rands and open brackets 30,000 rands. Then the total will be negative 130,000 rands. Remember, the reason why I write the opening balance as negative, I am recognizing this as negative, not because if you see in the trial balance, these are recorded. Let us check. In the trial balance, these are the entries that are recorded on the debit side, and these indicate assets. So now, and we know that a loan become an asset between a member and the close corporation if the close corporation gave money to the member. So now these are indicated as negative, indicating outflow of cash. That is the brackets indicating outflow of cash, because when the close corporation gives money to the member, cash is going out. Or when the close corporation lend money to the members, that is outflow of cash. So I write them as negative from that perspective. Even if you write them as positive, you are still right, because that will be from the side of being an asset. That will still be right, but if the opening balances of the loan that are to members are positive, then the repayment must be negative. Or if the opening balance of the loans that are to members are negative, then the repayment must be positive. Just be consistent with your approach. Even if you write negative amounts opening balance on the loans, you are still 100% correct if they are positive, but make sure that you're consistent with the method. So now we have a distribution that was credited, distribution credited, and the distribution will say that it will be 70,000 rands, and here it will be 30,000 rands. Then the total will be 170,000 rands. Remember what I meant when I was explaining the opening balance is that if you took your opening balance as positive, then the distribution will have to be negative. So just be consistent with your method. Then now the closing balance will be 30,000 rands, which will be negative, and here there will be 0, and the total will be 30,000 rands negative, which will be closing balance, because there was no other entry that affected the loan. There was no loan advance during the year. So now from there we are done with this exercise, and I hope you have understood it. Thank you on my side.